Stagflation looks very probable right now. Isn't that a dream scenario for gold mining stocks?
Well, a couple of fundamentals. It used to be that when they reported the costs of mining gold, it was the cash cost, just the cash cost of actual, how much to get that next ounce out of the ground. And a lot of people don't remember that when gold was officially at $35 an ounce, South African gold mines were mining gold that are reported $12 or $15 or $20 or $30 an ounce. Okay. Today they use what are called all-in sustaining costs, which not only is just the cash cost of the fuel and labor and things like that, but it even includes the cost of replacing the reserve that you've mined out this year and projected future cost of planting grass on the thing after it's all mined out and all this kind of thing. So all-in sustaining costs is a really total cost, all in long term. And industry-wide among producers, it's still about $1,000 an ounce. That's the average. Some companies are lower. Some companies are, right here at $1,700, $1,800. Okay. So that's great, but the problem is that cost of fuel, which is really big for mining, is doubled. Cost of labor's gone up. So costs of mining are rising. But I think, here's an opinion. I think that the price of gold, and I've said this for several years, price of gold is kind of like about relative to other stuff, more or less what it should be. There was this meme that's been out there for a long time. A sovereign will get you and 3 friends a fine meal in the best restaurant in London, or buy you a fine suit. Okay, that's kind of
Still true.
Kind of more or less, yeah, it's kind of stayed the same. So gold is not like at a giveaway level, which it was in 1971, or for that matter, in 2001, when in real terms it was actually cheaper than it was in 1971. It's not at that level. It's like at a equilibrium level, but I think it's going to go a lot higher because I keep repeating, because it's very important. It's the only financial asset that's not simultaneously somebody else's liability.
Right.
You could say it a Bitcoin, perhaps, but
yeah,
Bitcoin is a little different. Maybe it's still kind of early days to really be sure how Bitcoin will sort out. Maybe there's still room for a Bitcoin 2.0.
Could be. What about the gold stocks? Because people are shocked that they have responded to the current environment the way that they have. People haven't been following gold stocks for a while, especially.
I'm surprised that actually gold stocks are very cheap right now. Some of them have good dividend yields. 2 places you really want to be are gold stocks and silver stocks, which are kind of crappy and flaky by comparison for a number of reasons. Oil stocks and natural gas stocks, more than either of them actually.
What about uranium?
And uranium, absolutely uranium. Maybe coal still too, although coal's run up a lot. But those are the cheapest things out there today. And I am really, really overweight because I don't want to own most things. And, I'm familiar with the space. And right now, gold stocks, relatively speaking, and oil and uranium too, and so forth, are the cheapest things out there.
Yeah.
And there will be panic into them, I think.
Basically, the whole market's been moving down, basically all sectors except for some commodities.
Yeah, but you got to recall, it's that the average fund manager does not want to own resource stocks because they're, dirty, playing in the dirt kind of industries, and the people that are involved with gold and mining are not very ESG oriented.
No.
I mean, it's not the way they think, thank God. And so fund managers don't want to own them for that reason, and they don't want to own gold stocks also because they don't believe in gold.
Right.
They think it's a pet rock and it's stupid, and so they don't own it for that reason. I mean, it's like some stupid high-tech app stock that I might not have wanted to own when it was worth $100 billion. Well, they feel the same way.
Yeah.
So, they're really cheap. They're under-owned. And the average person in the public, like the younger generations, are just interested in technology, not gold. So nobody's interested in gold. Well, that's a really good reason to own gold stocks.
Yeah.
Unless you go, and it's not a pet rock. it's actually money. So
Yeah. So basically, people who are relatively new to this, investing in these, haven't, they've only seen what's happened over the last year or the last 2 years, where basically they've kind of marched down.
Yeah.
But the theory is that at some point, like there has been before, there's a catalyst in the market that starts to change the momentum around that, and at that point, they really start to move up.
yes, and actually, as I just said, if all-in sustaining costs are, let's say, 1,000, and gold is at, let's say, 1,700 or 1,800, it's a very, very profitable business right now. They're actually, the in-production miners are actually coining money. And I say that in the context of it being a really crappy business, all kinds of different reasons. Having a gold mine is not, to use the old phrase, like having a gold mine.